What are the current arrangements, just briefly, with respect to this CGT discount when it comes to investment properties?
So presently, if you have an investment property and you've held it for over a year, you receive what's called a 50% discount, which is only half of the capital gain you earn ends up being taxed.
OK, and the idea behind that, offering that 50% discount, is in recognition that some of those gains might be attributed to inflation and therefore they shouldn't be taxed. But in how many cases do you think these people with property investments are overcompensated?
Well, I think in the vast majority of circumstances, you'll see people overcompensated. And it's not just about inflation. The discount is there because we're concerned that someone receives a capital gain. It's been earned over multiple years, but they receive it all at once. So they're taxed at a much higher tax rate than if they'd received it over time. For that reason, there's a rationale for a good, strong discount, but 50% might often be a bit too much for that.
OK. The tax, for the critics of the tax discount, they say it overwhelmingly favours the wealthy. Does it?
Well, I would say that it does. I would say we need to be careful when we think about what we're saying, when we talk about capital gains, when we talk about the discount. We have a situation where we're currently taxing people who earn capital gains very differently to other people. And because of that, and because capital gains are amongst wealthy people do receive more of that discount. But this holds for everyone and it holds across all types of capital gains.
So if there's an argument to make the system fairer, given that it seems that different assets are being given certain tax discounts and others are not, where do you start with making the system fairer? Is it to take away this 50% discount on CGT on property assets?
Well, prior to the discount, there was a situation where people were taxed at full rates on capital gains, but to recognise that idea that they're earning capital gains in a single year, even though they've sort of been earning them over multiple years, and that leads to them being taxed too much, there was the opportunity to income average. There are many individuals with very different circumstances, some that end up overtaxed even with the discount, and many that end up undertaxed. If we could recognise those individual circumstances in the tax system, replace the discount with income averaging, with something that takes into account what people earn and when they earn it, then we would end up with a fairer tax system. So
if income averaging was introduced and the 50% CGT discount was abolished, would it help the current housing crisis that we had? Is that going to take investors out of the market, so therefore take some demand out of the market, make it easier for people to buy their home?
In a very narrow sense, there may be some effect there, where owner-occupiers would suddenly be able to afford at that stage in their lives. But if the capital gains discount is functioning this way, it's also making rents cheaper right now for people that won't have the opportunity to buy. The real driver of housing affordability is going to be around supply. And acting like the capital gains discount is the whole story of housing affordability is missing the wood for the trees.
We saw back in 2019, Bill Shorten, as part of many of the platforms that they campaigned on, there were changes to negative gearing, another tax incentive. That proved to be political dynamite. Do you think that the government will go near this?
Well, I think negative gearing is something that is problematic when you have a discount. But if you switch to a system like income averaging, something that recognised individuals' tax affairs more specifically, negative gearing becomes a non-issue. The fact is, if you are paying interest and if you are maintaining a property, you are receiving a deduction for a legitimate expense. That is a legitimate expense that you should receive a deduction for.
The discount is expected to cost the government around over $20 billion in this financial year. Given the bottom line, the fiscal position that the government is in, we know that the budget is nearing. Is this low-hanging fruit for the government? Change to the CGT?
Yeah, no, that's a fair point. I would be quite careful imagining that we're going to get a lot of that $20 billion immediately. The capital gains tax is a long-term tax. It's a structure of the tax system. And people, if they saw the discount fall and they thought it might come back, might delay when they sell their property. So we might not make quite as much money now, and it's not necessarily going to deal with interest rates and inflation right now. In the long term, it could be part of budget repair, especially if we're concerned about long-term fiscal sustainability.
Do you expect we might see other agenda items ahead of the CGT discount when it comes to budget reform in this year's budget?
I think there's going to have to be discussion about what will happen with the medium-term budget. We have an ageing population in Australia, and it's becoming increasingly clear that that is putting fiscal pressures on the government budget, especially when you consolidate and include what is happening with state budgets. And that is going to have to be recognised and increasingly dealt with.